So the government is taking bad assets onto its balance sheet, and it is borrowing record amounts of money, 1.7 trillion last year. Now let's look at that for a moment. If the government borrows to stimulate the economy, and by the way, why does it do that? Because individuals and businesses are not buying anything. They're terrified of where the economy is going, and they're on a buyer's strike. The government comes in and substitutes its own purchases for the purchases not being made by the private individuals and private corporations. So the government borrows. And our government has gone, like governments around the world, into massive, unprecedented levels of peacetime debt in order to do this. Not only is the government doing this, but this is put forward by all kinds of fellow economists and the public as a stroke of genius, as a deficit spending program that is going to solve our problem. As if borrowing like that has no consequences we need to worry about. As though we can blithely just borrow and it really won't matter and it will not be a problem, and we'll fix that all in the future when our economy's healthy again, and then we'll run surpluses and that'll negate the deficits and everything will be back to square one. I don't mean to be unfair, but that is the position of my colleague, who many of you read, Paul Krugman. That's what all the governments have been doing, borrowing like crazy. And it leads, among other things, to the following peculiar conundrum. When governments borrow, of course, there has to be a lender. Okay, who's lending to the United States government to carry out all of this? Well, here we have some peculiar answers. Number one, all kinds of wealthy entities, corporations, individuals, lend to the government, because that's safer and more secure than lending to anybody else in an economy like this, or investing in anything because things don't look so good. That's not a growth procedure. That's a churning of money. In fact, it's very ironic if you think about it, because if our government really didn't want to run a deficit, it could, of course, tax corporations and the wealthy. Then it could get the money to stimulate the economy without borrowing. It's even more interesting when you reflect that when the government doesn't tax corporations and the rich, choosing instead to spend money that it gets by borrowing, it goes to the same people to borrow the money. For the standpoint of a wealthy person and a corporation, if one has to choose between the government taxing it, end of story, versus the government coming to borrow it and use it for the same purpose and then pay you back with interest, that's not a tough call. I'd be a Keynesian deficit spending supporter myself if I were wealthy under these circumstances. So governments have been borrowing. I haven't the time again, but if I did, I'd enjoy talking to all of you about something I suspect you know, that there aren't enough Americans with enough money willing to lend to the United States government, so the borrowing we've been doing to keep our economy going has had to involve more and more borrowing by us from other countries. And the country in the world that has lent the most to the United States to help it out of the crisis of its capitalist system is the People's Republic of China. The communist government in China is financing the crisis activities of the capitalist government of the United States. Probably worth a few moments of thought, but not for the media here. But maybe you might think that some historical message might be lurking somewhere in this relationship. And even if you don't want to think about it, do think about this. If the estimates of the total amount of government and agency debt that the Chinese own is roughly in the neighborhood of 1.2, 1.3 trillion, which are what the estimates suggest, then it means, assuming the usual interest rates, that the United States government is now functioning as a collection agency for the People's Republic of China. Because every year we must send 50, 60 billion dollars to them in interest. So you should all feel good that when you drink a beer or buy a rubber tire or do anything that gives money to the federal government, that part of that will not be wasted on services or anything like that. Part of that is just a collection process. The government collects a portion of it and sends it to the People's Republic of China so they can build up whatever it is they're doing over there, which seems to impress a lot of people. And again, on behalf of the People's Republic of China, I want to thank each and every one of you for making this contribution. If that strikes you as a bizarre way to fix a crisis, good, that's my point. And it doesn't work. It doesn't work. The stimulus didn't work. Not only because it was borrowed money to which I will return, but if you stimulate, if you pump money into the economy, we are now an economy that loses a lot of the money we have because we import so much. Every one of you is wearing clothing that doesn't come from the United States. You know that. And you're driving cars that don't come from, and so forth and so on. So if you give money to the United States, people, businesses and people, it's hemorrhaged out of the United States. You're actually helping building jobs in other places with your stimulus. What is my point here? It hasn't worked. The stimulus didn't solve the unemployment problem. Making the banks whole didn't lead them to lend to produce jobs. It didn't work. Monetary and fiscal policy didn't work in these 3 years. And it shouldn't have been even tried because we knew it wouldn't work. And why do I say that? A little historical example. The last great collapse, 1929. Once Roosevelt got in, a few years later, he tried every monetary and fiscal policy that the Obama administration used. He tried that too. And it didn't work for him either. He kept trying. He kept running into the problems that monetary and fiscal policy lead to. He couldn't solve those problems. And the Great Depression lasted from 1929 at least a decade till 1939. We couldn't get the unemployment back down to what it had been before the crisis hit. What finally got the United States out of the Great Depression's unemployment was not an economic policy. Those didn't work. It was a radically different policy, a radical difference in America. We decided as a nation to go to war. We took half our unemployed people and put them in a uniform, and we took the other half and put them into work in factories to make the uniform and the bullets and the guns. That's how we got the unemployment problem solved. The lesson should have been learned. Your normal run of monetary and fiscal policy, about which the great debates every day in the press resound, is a bit of a shadowboxing. It's a bit of a distraction. You might even call the conventional debates between conservative and Keynesian economics a kind of weapon of mass distraction. Because meanwhile, what's happening as they debate, as they go back and forth? A little more Keynesian policy on a more leftist 3 months. A little less Keynesian policy and a more conservative the next 3 months, or as government changes. Maybe after the elections in November, we'll go back to the right, and then when that doesn't work, we'll go wobble back to the left. Meanwhile, what's happening? I would argue with you, and I hope you get this message, that while this shadowboxing debate is going on, while we're all supposed to get terribly excited about whether you are in favor of deficit spending or you're not in favor of deficit spending, the cycle, the capitalist cycle, is working its way through its normal process. And what is its normal process? A period of unemployment that's extended. until workers are willing to work for a lot less because they've been out of work long enough and the prospects look bleak enough that a job and a salary they would not have accepted before becomes something we'll have to settle for. Likewise, as the cycle unfolds and businesses go out of business, the cost of secondhand equipment drops because the sellers who are desperately going out of business outnumber anyone who's buying. And the rental cost of square footage goes down. And the lawyer you need to hire becomes desperate and will willing to work for less, and on and on and on. And when does it stop? When the costs of doing business have been broken down far enough so that a capitalist, an investor, a businessman or woman sees the prospects of profit at such low wages and such low costs, and then they go in, and then the system has another period of growth for 2, 3, 4 years until we're back in the same instability of this system, which no section or collection of brilliant economists has ever been able to figure out how to stop or control. That's what's going on.